Imagine a weapon so powerful it can cripple a country without firing a single shot. No tanks crossing borders, no missiles lighting up the sky, no soldiers marching into foreign land, just money, the US dollar. In the modern world, this currency acts like a silent force. It doesn't explode, it doesn't roar, yet it can bend economies, steer governments, and decide who trades freely and who gets locked out. It is influence that travels through banks instead of battlefields. Throughout history, every major empire has relied on a signature instrument of dominance. Britain projected power through a navy so mighty it controlled sea lanes and built a global trading empire. The Mongols expanded with cavalry that could cross enormous distances at breathtaking speed, striking before enemies could even prepare. The United States, however, built its strongest advantage around something that is neither a ship nor a sword. Its main weapon is financial, and at the core of that weapon sits the US dollar. Military power is visible. Tanks and missiles are direct expressions of force. You know where they are, you know when they strike. The dollar works in the opposite direction. It is discreet, almost invisible, yet far-reaching. It shapes how countries trade, how they borrow, and how they survive economic crises. It creates dependence on a system that America ultimately controls. And once nations are locked into that system, leaving it becomes extremely costly. The story of the dollar begins in 1792, when the United States passed the Coinage Act and formally established the dollar as the country's official currency. At that time, its value was tied to both gold and silver, a double metal standard that gave it stability and credibility. In an era when many states printed paper money without reliable backing, that metallic link made the dollar unusually trustworthy. Still, for a long period, the dollar remained mostly domestic, serving local trade inside the United States. Few could have predicted that this humble currency would one day run the world economy. The dollar's true turning point came after World War II. That war left Europe and Asia devastated. Cities were reduced to rubble, industries collapsed, government budgets were broken, and entire economic systems struggled to function. The United States emerged almost intact. Its industrial capacity was not destroyed, its financial institutions still worked, and its production expanded rapidly. By the mid-1940s, America had become the largest industrial and financial power on Earth. In a world searching for recovery, the strongest economy naturally gained the loudest voice in designing the future. In 1944, delegates from 44 nations gathered in Bretton Woods, New Hampshire to create a post-war global monetary order. The decision they made reshaped history. The US dollar would become the world's reserve currency. Other countries would peg their currencies to the dollar, and the dollar itself would be pegged to gold. With this single move, the dollar stopped being only America's money. It became the backbone of international finance. Reserve currency status is not just symbolic. It means central banks worldwide keep large quantities of that currency in their vaults to manage trade and stabilize their economies. Once the dollar gained this role, global demand for it became constant. Countries needed dollars to import goods, to service debts, and to hold in reserve for security. That demand created a self-reinforcing loop. The more dollars the world held, the more trade was priced in dollars. The more trade was priced in dollars, the more dollars everyone needed. The system kept expanding without interruption, placing the United States at the center of the world economy without it having to deploy military force. The dollar's dominance is especially visible in commodities. Oil, wheat, gold, copper, and many other essential resources are priced primarily in dollars. This obliges nations to acquire dollars if they want to buy or sell internationally. In practice, the global economy needs dollars the way a body needs blood. This constant demand gives the United States extraordinary freedom. It can borrow more cheaply, influence global liquidity, and shape credit conditions worldwide. In effect, America benefits from a financial privilege that no previous empire possessed at this scale. But the dollar is not only a tool of trade, it is also a political weapon. Because most of the world's financial infrastructure runs through dollar-based systems, banks, payment networks, and commodity exchanges, the United States can control access. If Washington restricts a country from transacting in dollars, that country faces immediate economic pressure. Sanctions become financial warfare, executed quietly but capable of doing immense damage. Iran and North Korea illustrate this clearly. When excluded from dollar networks, their oil sales shrink, their banking systems become paralyzed, and normal import-export channels break down. The United States achieves strategic pressure without risking soldiers. After Iraq invaded Kuwait in 1990, dollar-driven sanctions froze assets and blocked oil revenue, damaging an economy heavily dependent on that sector. Similar dynamics played out in Iran under sanctions between 2018 and 2020. In 2022, Russia's partial exclusion from dollar-linked finance caused major disruption in its international trade. Different cases, same lesson. When the world's economy is built on one currency, the country controlling that currency holds unmatched leverage. This dominance is reinforced by major institutions of global finance, including the International Monetary Fund and the World Bank. These bodies operate within rules and systems where U.S. influence is decisive. Through them, America can shape lending conditions, crisis responses, and policy directions worldwide. It is strategic power exercised indirectly, like a chess move that changes the board far beyond the immediate square. Still, the dollar is not all-powerful. China and Russia have been pursuing ways to reduce dependence on it, experimenting with alternative settlement systems, bilateral trade in local currencies, and diversification of reserves. At the same time, the rise of cryptocurrencies and central bank digital currencies creates new conversations about what money could look like in the future. Yet despite all of this, the dollar remains deeply embedded in global markets. No rival currently matches its liquidity, global acceptance, and stability. Ultimately, the dollar's strength rests on trust. Unlike a weapon measured by firepower, this weapon is measured by belief. Nations, investors, and ordinary citizens accept dollars because they trust the economic strength of the United States and the durability of its institutions. For nearly 2 centuries, this trust has held strong enough to anchor the world's financial order. But if confidence in the dollar were ever to erode dramatically, its influence would shrink, and the consequences would ripple through every economy connected to it. The history of the dollar teaches a broader truth. Money is not merely a medium of exchange. It is influence, diplomacy, and control. In the modern era, the nation that commands the reserve currency can shape world events without marching armies. The U.S. dollar is America's silent weapon, and it continues to shape global order today.